the ability to control inflation. And this very week, we saw the government putting taxes additionally onto beverages, onto alcohol, so people are going to be paying more for that. It seems to be a very confused picture.
Yes, good afternoon. You're absolutely right. It is confused, and it could look even more confusing in coming months, particularly since we're quite likely to see a very substantial drop in the inflation rate in July. Well, rather, we're in August now, but when the July figures come, because all we've got so far is June, we might see actually a very substantial drop in inflation because, of course, it's the energy price cap and everything else that has affected what we're paying for our energy right now. Of course, prices have gone up very significantly a year ago. So the question is, what will these interest rates do except affect people's willingness to go out and spend, really upset their household budgets? And as was being said earlier by your correspondent there, you do have a problem that the interest rate increases take a long time to have an impact. So far, the drops that we have seen in inflation have only come from the decline in energy prices worldwide, and also the fact that, yes, food prices are still quite high, but they are slowing down as well. And in some cases, of course, they're falling. So we're seeing those impacts coming through finally, but we're not really seeing the impact of the higher interest rates. So, you know, they're raising rates again now. This particular increase that we're seeing today is not going to have an impact for another, many months, because it takes time to get through to the consumer. But everything else we've seen so far is beginning to bite, actually. So people particularly are seeing their mortgage rates, of course, going up so significantly, and household disposable incomes are being affected.
And some are suggesting that the problem we hear with the Bank of England is that they're not really looking at the British economy so much as they're kind of following what the Fed's doing in America. They put their interest rates up again yesterday, or today, rather, yesterday probably, and we've just followed them.
We have. I think both the Federal Reserve and the European Central Bank last week put rates up by a quarter of a point. And in a way, I presume the Bank of England felt that they had to do something about it. But what is worrying is that we've seen some of the policymakers, policy advisors, I presume, since they didn't actually manage to get it through, in the Bank of England Monetary Policy Committee, going for a 50-point increase. So we would have had a half a point increase in our interest rates, which of course would have worried the markets, because the mortgage rates, which are now being recalculated downwards, interestingly enough, because people thought and think still, but perhaps we're at the peak, would certainly have panicked if suddenly rates were considerably higher than they had anticipated. The market thought a quarter of a point because the other banks had done the same. Now, the interesting thing is, what does it mean for borrowers more generally? And it's not just, of course, a question of households with fixed mortgages, which in some cases are not being affected yet. It's also businesses, and the British Chamber of Commerce, for example, is looking at that effect and has put out a press release worrying about the impact on businesses. But also what it is saying is that we've got to look at other factors, which again have got absolutely nothing to do with interest rate increases we've seen. So input costs are going down significantly for businesses, whether it's manufacturing or whether it's in the services sector, except for staff costs in the services sector. We've seen actually producer prices coming down, by which I mean falling, not just inflation being reduced, but actually prices falling, coming out of factories, for example, or other outlets. So we are beginning to see that happening anyway. So you question whether this high level of interest rates is really justified. And I presume the Bank of England thinks yes, because our inflation is considerably higher than other countries. But one can look at the reasons for that inflation and point it up to a point, if you like, to what has been going on in terms of government policy more generally, which has to do with how did you adjust inflation expectations. We didn't intervene to do much by the energy prices until quite late, whereas other countries did it earlier. We didn't do anything about food prices, whereas loads of other countries have got either voluntary or mandatory restrictions on them. So people started asking for high wages, and of course we're now stuck with a high wage environment and a bit of cost push, which I think is what the Bank of England is trying to control right now. But whether it will is a question mark.
Well, exactly right. Vicky, nice to talk to you. Thank you very much indeed. Vicky Pryce, Chief Economic Advisor at Centre for Economics.